Hey guys, welcome back to Market Talk Monday. I'm going to jump right into it. So this past week, the spotlight was on Jackson Hole, Wyoming. This is where the central bankers, economists, and financial leaders, they gather every year. And this year, Jerome Powell was highlighted because he made headlines with his dovish pivot. Now, what does that mean? Well, Powell signaled that the Fed may start cutting interest rates as early as September, because inflation is actually holding steady and the job market is showing signs of cooling. But who was saying this earlier? Who is Jerome Powell? And he is the current chairman of the Federal Reserve. He's been in the spotlight due to this inflation battle that we've all come to know. So I feel like he has his finger on the pulse, and we're almost like hostages right now because he overcorrected himself after his slow start. It's time that those rates come down to help stimulate the economic growth. So this is a big shift because remember, over the last 2 years, the Fed has been raising rates aggressively to tame inflation, and that pushed mortgage rates up, slowed down parts of the housing market, and made borrowing more expensive across the board. But Powell's tone at Jackson Hole told us that the Fed is preparing to ease off on the brakes, right? So let's talk about what happened after his speech. Markets reacted instantly. Stocks surged, especially in tech and growth companies, because lower rates make future earnings more valuable. Now, bond yields dropped, which is investors betting that cheaper money is coming. So the probability of a September rate cut jumped to about 85% from just 73% a week ago. So, this is the sentiment that I've been feeling or just sensing, right? That's just kind of my understanding of what was coming. But now let's bring this back home to real estate. Mortgage rates often alongside bond yields, right? Mortgage rates often move alongside bond yields. So if this shift holds, we could finally see mortgage rates tick down after being stubbornly high for months. Now, here's what that means depending on where you are in the market. For buyers, a drop in mortgage rates could literally mean hundreds of dollars saved on your monthly payment. Amazing. Once again, we are in a buyer's market, if you don't know. Now, that could be the difference between stretching your budget and comfortably affording a home. For sellers, lower rates bring more buyers off the sidelines. Now, that could support prices or even push values higher as demand picks up. So, investors, cheaper financing means better leverage. Cash flow numbers, they start to look stronger, and opportunities that didn't pencil out before might suddenly make a little bit more sense. For renters, if investors can buy with lower financing costs, then that might ease some pressure in the rental market over time. But in the short term, it could also spark competition if buyers jump in. So it just really depends, right? We are in a wait and see kind of scenario. Now, here's the big question. Will the Fed actually follow through? Because I feel like it's been time, we're long overdue, because Powell was clear. They're still data dependent, which means everything hinges on inflation. Now, later this week, we get the PC inflation report, which is the Fed's preferred gauge of price pressures. Now, the PCE stands for personal consumption expenditures, and it's basically the Fed's favorite measure of inflation. Unlike the regular consumer price index, or CPI, which looks at fixed basket of goods, PCE adjusts for how people actually change their spending habits over time. Now that makes it a little bit more flexible, and in the Fed's view, a more accurate reflection of real world inflation. Now, if that number comes in hot, the Fed may have to tap the brakes again and hold off on cuts. So it just depends. But on the other hand, if inflation keeps trending steady, then September could mark the start of a new chapter in this rate cycle. And here's something else to think about. A shift like this doesn't just affect mortgages, it impacts credit cards, auto loans, business financing, you name it. Basically the cost of money everywhere. So that ripple effect is what makes Powell's words at Jackson Hole so important. So here's my clear takeaway. One, I've been saying this for a while now. We're definitely overdue for the drops. But Powell's message was clear. The Fed is starting to tilt away from just fighting inflation and towards supporting growth. And if that holds, it could open up new opportunities for buyers, sellers, investors in the real estate market. But it's not a done deal yet. Like I said, we're just having to wait and see because the data still needs to back it up. So we'll see what happens in September. I'll check in again then. We'll see what those rates are going to look like. So Thank you once again for joining me here for my Market Talk Monday. Now I want to hear from you. Do you think the Fed would actually cut rates in September, or is this just more talk? Drop your thoughts in the comments below. Talk to you soon. Herm out.